Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation. So, Geraldo, let's get into this accumulation phase a little bit and talk about that before we kind of transition.
Yeah, absolutely, James. You're exactly right. The best time to start planning is really as soon as you can, and being able to start right out of the gate when you're graduating from college. A lot of life changes going on, but this is really where the value add of having an advisor for the whole family can be of value to the folks that we work with, because we're not just working with the families, we're also want to help the children, really intergenerational type work that we do. And part of that is just even the most obvious things, like you mentioned, can be the things that get missed. And if you're missing the match, first thing, make sure you contribute to the 401k. Get the benefit paperwork from your company. What are the rules for that 401k plan? What's the actual match that they can get? And then getting that set up so that they have it set up on automatic deduction from their paycheck. They're at least getting the match.
A lot of times I get asked the question of, when I'm setting this up, should I invest before tax or after tax? And that's not an easy one to just very carte blanche blanket say everybody should do before tax or everyone should do after tax. That is very situationally dependent. What I normally ask is, do you believe you're going to make more money? and the answer usually is hopefully, yeah. Because when you're younger and on a relative basis, you're in lower income, it's absolutely best to save in a Roth on an after-tax basis. It means less dollars, same dollar for dollar goes in. However, all of the growth is completely tax-free. There is an inflection point, though. I usually find it's when an individual moves from being in the 10 and 12% tax brackets into the 22% and 24% tax brackets that we need to start doing a little bit more analysis as what's best for them. But that's a very relatively minute example of how. The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.